This is Scott Becker with the Becker Private Equity and Business Podcast. Thrilled today to be joined by one of our most listened to guests and experts, Rick Kess. Rick is a leader and partner at RSM. He speaks often about the private equity industry and trends we're seeing there. Rick, let me tee it up and ask you, what are you watching currently in the private equity space? Seems like all of a sudden there's a lot of activity. What are you seeing?
Yeah, Scott, I think we would resonate with that. I think we're seeing a lot of inbound calls to do deal advisory work, whether it be sell side or buy side diligence, which obviously is, pretty good leading indicator that firms are looking to hopefully execute on deals. And I think, we continue to track the macroeconomic environment. I think last week, we had got pretty good favorable information related to inflation. I think, relatively speaking, slowing to a point where we haven't seen since, about 3 years ago. So I think that was favorable information to help kind of frame the expectation that perhaps the Fed in their September meeting can be in a spot where, inflation's kind of coming down to a point where they hopefully can be happy and perhaps be, all that more willing to make a rate cut that I think everybody's hoping for and somewhat at some level probably anticipating at this point. So I think all those things are helping our clients formulate a position that, they need to be in the market in a pretty quick order if that rate cut happens, because I think there's a little bit of a fear of missing out, almost kind of FOMO perspective of if we're not ready to execute, come pretty quickly after that September meeting, are we going to miss out on some of the activity that, we're hoping to move on?
Thank you. And it strikes me that some of the largest funds are already moving. What are you seeing there? It seems like the Blackstones of the world are already back to deploying capital incredibly quickly. KKR is looking at a ton of exits. What else are you seeing out there? Is there just already a lot of activity?
Yeah, I think, Scott, as you mentioned, I think the larger funds, perhaps have a little bit more, just from a resource perspective, the ability to do things, at different speeds and timing than other funds that perhaps don't have the same level of resources and kind of deployable capital. So, sometimes the larger funds are a little bit of a leading indicator of where things are going for the core middle market, which is obviously where we spend most of our time. So, I think coincidentally, I would probably say that, most of the calls that we're taking or I'm hearing about, in terms of opportunities for us to do work in deal advisory happen to be some of the, upmarket funds that we typically deal with. So I think that, you kind of see that a little bit of, kind of to take the old term, trickle down economy, a little bit of that, of the larger funds acting quickly, and then, the middle market firms acting next, and then the lower end of the middle market kind of operating sometime thereafter.
Thank you. And I think that's exactly what we're seeing is that the big funds getting way out there. They're such huge institutions today. They're responsible to such big institutions, and they can do big deals. I mean, it's sort of amazing. Even the Carlyle Group, which is one of the big five, just did a deal where they're buying Baxter's kidney unit. And it does seem like as the big funds get going, it's sort of lead horses for the rest, and that the mid-market funds are starting to wake up from their slumber, get after it too, and starting to see opportunities. Is that a sense of what you're seeing?
Yeah, I think that's well encapsulated in terms of what we're seeing and feeling in the market today.
And Rick, anything that's particularly exciting to you that's on your mind currently? Anything that you're particularly excited about?
Yeah, I mean, I guess, probably just like anyone else listening to this podcast, I'm excited that, if rates do come down, to see what the effect will be in reality, because, I think just kind of the rumblings we're hearing in the kind of a little bit of a surge of conversations happening, will really all come together, and we'll kind of be back in a spot of like, okay, this is what we've been waiting for, and kind of hoping for that, if you will. Just kind of as deal activity really does spur a lot of client activity for us, and obviously that's accretive to our bottom line, but also just fun to be part of. Seeing our clients grow and achieve the things that they're looking to do is really really rewarding for most professional service people out there. So I'm excited to see if that all comes together and we get to be kind of part of that ride as we go into 2025.
Thank you. And Rick, anything else that's top of mind that people should be thinking about currently? Anything else you want to put on the agenda?
I just saw an article come across my desk this morning about, the inflation related data that came out last week, and it hopes for interest rate reduction, and then, what that means for kind of a recession probability perspective. And I haven't studied it long enough yet to really make a call on it by any means, but could be really, powerful data to help support the fact that, a recession that, I think people, may have predicted even just 2 weeks ago, the likelihood of it coming down. Pretty positive information that, really did kind of pop my eye a little bit this morning. But I think it makes sense. And I think if you kind of step back and take that apart and literally think about where we were from an inflation perspective, 12, 18 months ago, with inflation nearing, 10%, to be able to bring that down and, really not impact the economy from a recessionary perspective is pretty remarkable, to show how strong the U.S. and maybe even perhaps the overall global economy is, and how good the central banks are at kind of making things happen and protecting us from some of those really seismic shocks that could have happened in without some of those mechanisms at hand.
No, it's really fascinating. Even with the amount of insane deficit spending that's been done in the country, it seems like that Chairman Powell's done a very good job of trying to hold the line on interest rates to bring them up, but not have it, not have this become a full-blown recession. I mean, there's obviously some concerns. You see that articles on consumers still 70% of the economy, 65-70% of the economy. Consumers have sort of used up their pandemic savings. It also seems like they've splurged on credit card debt, and we'll see if and when that does, that catches up to people. We'll see. But what a fascinating situation, isn't it?
Yeah, no, I would totally agree.
But Rick, as always, I want to thank you for joining us on the Becker Private Equity and Business Podcast. Literally one of our top listened to guests and just a fount of information. Thank you for joining us today on the Becker Private Equity and Business Podcast.
Thanks for having me, Scott. Appreciate it.